Final 2 hours of this trading weekend has been an action-packed one, even though it's been a truncated one. You're watching Midcap Radar live from the CNBC-TV18 Motilal Oswal studios. I'm Hormas Patakia. With me is Vivek Iyer. Vivek, good afternoon. It's not the Friday that the bulls were hoping to have, but the broader markets are facing some bit of pressure compared to the benchmarks.
Good afternoon, Hormaz. A week that you'd want to forget given the fact the kind of volatility you've seen, especially in the last couple of trading sessions on the tariff tantrums that we are seeing. Mid-cap index down almost 3%, small-cap index down over 3%. But we have quite a lot lined up on the show. Let's start off with the top headlines. A sharp fall in global equity filters through with mid-caps bearing the brunt. Uncertainty over the impact of hefty tariffs imposed by the US severely hurt sentiment. Metals and pharma are the biggest drags. Financials, although, buck the trend.
Pharma stocks are spooked by Donald Trump's comments saying that tariffs will be imposed in the not-so-distant future on drug imports by America. He adds that these tariffs will be at levels not seen before.
Bharat Forge shares down near 7% in trade after Morgan Stanley downgrades the stock to an equal weight from an overweight rating earlier and cuts the target price. The brokerage says US slowdown and tariffs could offset non-auto bills and defense order gains for the company.
Nifty Metal is the top sectoral loser after Donald Trump's reciprocal tariffs sparked slowdown concerns. Stocks like Vedanta, Nalco and NMDC have lost between 6 to 7%.
Mazagon Dock is under pressure after the government is set to sell up to 4.83% stake in the company via an offer for sale. The floor price of the OFS is at 2,525 rupees a share, which was an 8% discount to yesterday's closing price.
Not much has changed over the next 30 minutes and the Nifty is still down around about 300 points, still trying to hold on to that level of 22,950 is for the index. Of course, we're going to end the week lower and that's of course after the volatility that has resulted due to Donald Trump's reciprocal tariffs. But take a look at the broader markets. They are the ones that are in the thick of things. They are outperformers when the markets were falling earlier in the week, but not the case today. 1,500 points gone on the mid-cap index and around about 3.5% gone on the small cap index as well. So the broader markets are the ones that are facing the pressure, be it mid-cap IT, the metal names, the pharma names, all of them are bearing the brunt of the resultant global volatility as a result of Donald Trump's reciprocal tariffs. But which are these mid-cap movers which are either taking it on the chin or are bucking the trend? Vamakshi is joining in with just that. Vamakshi, good afternoon.
Well, good afternoon, Hormaz. You know, the bulls will be saying, thank God it's Friday, and that is because the markets will be shut for the next 2 days. But, you know, we still have a couple of hours of trade left. So let's look at some of the top losers today. The list includes a pharma name, which is Laurus Labs. That stock is down nearly 8%. Samvardhana Motherson, of course, has been declining in trade today since the get-go, trading close to the day's lowest point, down nearly 7.5%. Ipca Labs is one such other counter, down 7%. LG Equipment too, down nearly 7%. The metal stocks also continue to decline in trade today on account of some of the demand concerns that are creeping in. Hindustan Copper, of course, is down nearly 8%. Welspun Corp is down 7%, and so is Nalco. NMDC too trading lower in trade today. Apart from that, it is the IT space that is bearing the brunt of the market. KPIT Tech, which is a mid-cap name, down nearly 6%. Coforge, Sonata Software, and Emphasis, all of these counters are trading lower today. Let's also look at some of the news makers today. Most of the list is, of course, in the red. Mazagon Dock, that is an OFS that is coming in from the government, down nearly 6.5%. Angel One also reported its update for the month of March. The stock is declining on the back of that. Bharat Forge, of course, there's a downgrade coming in from Morgan Stanley. They've downgraded it to equal weight, cut the target price to 1,170. AB Fashion and Retail too. There was an analyst meet yesterday. A couple of brokerages have come out, and Citi has a sell call, target price of 260 per share on that counter. On the flip side, you know, in such a weak market, we have very few gainers, and those are on the screen. Rainbow Medicare, you know, that stock is up nearly 3%. We also have Castrol India, which is up nearly 1.5% or so. Imami as well as Marico, some FMCG names, domestic facing, those stocks are up and away in trade today.
Thank you so much, Vamakshi, for joining us, giving us a sense of how exactly trade is panning out in the broader end of the markets. But it's now a good time to welcome Hemen Kapadia from DR Choksey FinServ for a technical check on the market. Good afternoon, Deven. You know, every time we speak to you, markets have seen very, very sharp moves. This Friday is no different. small cap index is down 3.5%. Where do you see markets headed from here on?
Very good afternoon to you, Vivek. Thank you for having me on the show. It's always a pleasure. Well, obviously markets are a reflection of human sentiments, but there's an entirely human made problem, rather American made problem. So VIX is down to sub 14, frankly speaking. Nothing wrong. We had a 1800 point move in the Nifty, Vivek. So one would have expected a time price retracement, which we're going through, but this has gone deeper than expected or beyond comfort. We had 3 bullish gaps. The second one gets covered today. So the last one is much lower. I don't think that's coming, but the setup is not exactly very copacetic. Bank Nifty relative strength, but we could see some sort of cooling off happening over there. But despite all the gloom and doom, I feel it's an opportunity to buy if you're brave enough. Obviously, stop loss needs to be kept in place, because if the Dow Jones tanks 1500 points in a day, there's nothing one can do except hope and pray that we didn't carry a position overnight. But yeah, I believe there is significant support at 22,800 or so. So I wouldn't be very bearish, and I have a couple of buy calls in this market mayhem currently, Vivek.
I mean, so until what level would you be a buyer? Until you reach 22,800 and you hold on to that? If you go below 22,800, would that view change? And of course, you could share your recommendations as well.
Yeah, I think you sort of captured it pretty well. I would say till 22,800, sorry, till 22,800, I would be reasonably okay, and that would be my operating stop loss. If 22,800 breaks from a closing point of view, then all bets are off, and you'd probably take a hit, take a stop loss, and leave. Having said that, 2 stocks where you can buy. First is PEL, Piramal Enterprises. One can buy PEL at around 970, stop loss 955, target 1010. We've been consolidating, moving sideways in an 8 trading session range. Our downside appears limited. All the mechanical indicators are in buy mode. There's a turnaround on the weekly charts also. So I believe it's a correction within an up move. Almost similar logic comes in for CAMS, Hormuz. One can buy CAMS at 3710, stop loss 3660, target 3810. Once again, 8 to 9 trading sessions, sideways movement in the midst of an uptrend. Oscillators by weekly chart showing positivity. Everything seems to suggest that, okay, there's a recovery, not a rally, but the recovery has not run its course. Even now, there is steam left on this.
All right, Hemant, thank you so much for sparing time, joining us today this afternoon with your views on the index and specific stocks as well. Just before we take that break, pull up Tata Motors is down to the lowest point of the day. Of course, on mid-cap radar, but need to pull up Tata Motors at the lowest point of the day now. The stock made a recovery from its 52-week low from 606 up to levels of 700, and now is back down to levels of 600, back near to its 52-week low. Just before we take that break, a small programming note for our viewers as well. CNBC-TV18 and HSBC India are back with Season 2 of the SME Champion Awards. This prestigious platform celebrates SMEs that are pushing boundaries, making an impact, and are shaping the future. Nominations are now open. You can scan the QR code now and submit your entry for the SME Champion Awards Season 2. We'll take a short break. Back on the other side.
With the baton of power set to shift, Bharat's youth will drive the next wave of change. The biggest leaders and policymakers, global trendsetters, business icons, and entrepreneurs will come together to inspire the next generation of change makers. Don't miss your chance to witness it all live. Rising Bharat Summit 2025.
Welcome back. And as President Donald Trump has imposed a 26% import duty on India, let us connect with the management of Pearl Global Industries. The MD and Group President Pallab Banerjee is joining in to decode the impact on India's textile sector. Mr. Banerjee, good afternoon. Thank you for joining in. I'd like to start off by asking you, what do you make of this decision, especially considering the fact that you have a significant manufacturing presence both in Bangladesh and in Vietnam, where significantly higher tariffs have been imposed in comparison to India, although you do have manufacturing operations in India. But what do you make of this move?
It's a good afternoon, first of all. Thank you for having me on this show. Definitely, it's a big step from US President, and I think he's redrawing the entire supply chain of the globe. Of course, it's a start. It's just the start at this point of time, and a lot of things would happen. As of now, I think the tariff that has been imposed for all the countries which is making the apparel across the globe, where the major production is happening, so that's going up significantly. So, and this is the kind of tariff that has been imposed, cannot be mitigated just by changing the supply chain, at the top of a hat. So that means what I'm looking forward to is definitely some kind of inflation that will be passed on, that will happen in the garment prices or the retail prices in USA, which I think he's ready for.
Right. Pallab, like Hormal just asked you, when you're talking about your manufacturing presence, you actually have manufacturing presence. You have 9 facilities in Bangladesh subject to higher tariffs. You have facilities in Vietnam as well. They too are subject to higher tariffs. So relatively, it appears as though Pearl Global is more susceptible to higher tariffs compared to your own Indian peers as well. So number one, what is the percentage of exports you do to the US market from the facilities outside of India? And do all of those exports go mainly to the US markets? And how will you mitigate the impact that you're going to be seeing from the higher tariffs?
Yeah. So our share in the US market, that means our goods that is going into the US market, is close to about anywhere between 45% to 50%. There are certain global brands which operates out of US. We are supplying to them. That percentage sits with us about close to about 60%. But the goods that is going inside the US would be less than 50%. Now, the countries like Bangladesh, which had a duty advantage or GSP advantage that they had for countries like European Union, UK, and all these Canada and all. So naturally, the business is more from there compared to US as a market. If I talk of India, India has been more exposed to the US market. Talking of Vietnam, that would be again more to the US market, because Vietnam, we make some specialty product which is not possible anywhere to make apart from China. So that's how our business strategy has been. And so that's how the distribution has been. Now, talking about tariff, you have to understand the whole thing, that if you look at US statistics, US imports about $90 billion of apparel. If I talk about only my industry, which is apparel. So out of this 90 billion, almost 21% is coming out of China, and followed by about 18%, which is coming out of, Vietnam. Another maybe 9% is coming out of Bangladesh. If you look at this, between these 3 countries, almost 50% of the goods is going into USA. And the numbers are substantial. If you see, China does about close to $18-19 billion of goods which is going into US. Similarly, Vietnam would be another $16-17 billion. Bangladesh would be another $10 billion. So this is the kind of FOB that is going in from this. If I talk of that 90 billion, so these numbers cannot be shifted overnight.
Right.
Cannot be formed.
Mr. Banerjee, sorry to cut you in. I was reading through your previous quarter earnings call where you had mentioned that as your order book, your share of US customers to non-US, US based customers to non-US based customers is 65-35. 3 years back, it was 85-15. Now, when these tariffs kick in, what does it do to your business, your company in general? Because would that number come down further? Would you be turning focus more towards a domestic focused business? And once these tariffs also kick in, and potentially if you do have to end up paying higher tariffs for exporting from Vietnam and from Bangladesh, what does that do to your overall projections? Because you had also made a projection that you plan on getting on to revenues of around 6,000 crores by FY28. What does that do to those targets?
So I don't see any change immediate. Of course, there will be a lot of changes that will be happening from going forward. But for the next 2 to 3 months, I don't see immediately like things will change drastically. US have to wear the garments and they have to import the garments. And fortunately, or unfortunately, whatever you say, the 50 to 60% of the garments is coming or going from Asia. Yes, what will start happening over time is that the countries which has got lower tariff, the brands or the retailers would try to be more exposed into those countries. But those countries have to build up the infrastructure to supply the apparel. So as I was talking about the numbers, if you see like it's a big number of $45 billion that is coming from these countries, which is now getting a tariff of 45% extra tariff that they have to pay. Now that cannot be like overnight shifted to a country which doesn't have like, which are the countries that are attractive now. A Turkey or a Central America or maybe an India, which is at 26, lower than the others. But hardly we have any manufacturing setup which can give these big numbers. Of course,
understood
that our number in India will go up, significantly at this point of time.
Pallab, right. Pallab, one question. We also understand on the back of these tariff imposition, we understand that there could be a certain impact as far as demand is concerned. We also understand in order to mitigate the impact, there will be certain price hikes necessary. Do you feel that customers are well placed to absorb these price hikes? What percentage of the incremental increase in tariff can be passed on? What is the hit you will have to take to margins in case you are not able to go ahead and fully impose or fully pass on the price hikes? And also, for Pearl Global, could you give us a consolidated or what will be the effective tariff that is applicable to you post this imposition, given the fact that you have multiple facilities across the globe?
See, first of all, the tariffs are not paid by us.
Right.
The buyers, the retailers and the brands,
absolutely,
when they import the goods, that's the time they pay the tariffs. Now, let's say a company in the US, which is importing goods from us or anybody else, they would be paying this additional tariff. If they're taking the goods from India, the additional tariff comes out to be 26%. If they're taking the goods from, let's say, the other country like China, then it's 54% additional tariff that they have to pay. Now, that's why I was talking about like if 45% additional tariff, let's say the average from these main manufacturing countries of apparel, that cannot be absorbed by the retailer or by the supplier. Because if you do the maths, then that 45% means like 15% at the retail level.
Right.
To 15% of the price increase, the cost of goods that is going up by almost like 45%. That will impact like normally it's 3x. Let's say a $10 garment where the American retailer have paid a duty of 17%. I'm talking about cotton garment. Let's say this cotton shirt. When it's imported into US, if it's landing at $10 after paying a 17% duty, now there will be an additional duty. If you're taking the goods out of China, Vietnam, Bangladesh mix 50%, that means the effective tariff comes out to be almost 45%. Now that means this $10 garment will be sold, let's say 3x. That's an average if you talk about, I'm just generalizing the whole fact now.
Okay.
So that it will be sold at $30. So that means this 45% effect is 15%. Now the supply chain will be working on how to mitigate this risk. 15%, that means even if it's divided, let's say for a hypothetical situation, 7.5% absorbed by the retailer and 7.5% absorbed by the supplier. Now both this company cannot survive by absorbing from the bottom line 7.5%. So naturally, this will be passed on to the consumer. And what portion of it, whether 10% of it, 12% of it, 8% of it, that's something we will see over these next few months that will be coming out. Now, so is looking at this 7-8% or 9% kind of inflation in this particular category and similarly some other categories that's getting imported. That's one of the hypothetical situations that I can think of. Now, as a company of Pearl, what should be my mitigation risk? Yes, we have been working from, we have already decreased from that 85% to our dependence into US market. US in general, like the goods that is going into the US would be just below 50% at this point of time. But US-based customers, still we are at 62% approximately. So now that number will continue to fall for immediate effect for me, for my benefit, for my company's benefit. But then over time, this is the biggest retail market, the biggest consumer market. So we cannot do it. we have to be in synchronizing what's happening out there. So according to me, some of it will be passed to the inflation, and this scenario of the supply chain will be redrawn.
Right. There are plenty of questions, Palab, but we're running out of time. But thank you so much for sparing time and joining us today. Wish you good luck for the rest of the financial year as well. That was the management there of Pearl Global in the line of fire. Actually, it's 17% lower now. One of the few garment exporters that are underperforming in today's trading session. We take a short break, and we'll be before we take that short break, the 350 points down now on the index, and of course to 22,900 is where the index is now, and a very key support level is where the Nifty currently stands at. Take a short break, back on the other side.
Welcome back to Mid-Cap Radar. Well, the sell-off that started or resumed at 130 has intensified. All of the four indices are now in the red. The Nifty Bank 2 has given up its gains and now trading with cuts. A couple of stocks, especially from the metal pack, have a look at Hindalco as well as Nalco. Both of these stocks under significant pressure today. In fact, the entire metal pack is one of the sectors that is under immense pressure in today's trading session. The mid-cap IT space, or the Nifty IT Index 2, continues to see the sell-off that started yesterday morning, and the mid-cap IT index, especially a few stocks, have lost in excess of 15%. Names like Persistent, Coforge are some of the stocks that are under significant pressure. But with that, it's all the time we have on this edition of Mid-Cap Radar. Your stocks when we return.